Hey everyone! Today I'm going to show you how to set a stop loss in Trading 212 so you can protect your profits and limit your losses. If this helps you, hit like so more traders can find it. A stop order acts like a safety net for your trades. When the stock price reaches your stop price, Trading 212 will automatically sell your shares to prevent further losses. There are two types of stop orders: buy stop and sell stop. When the stop price is hit, the stop order becomes a market order and executes at the best current price available. To set a buy-stop order, first select the instrument you want to trade. Then, choose the number of shares you want to buy. Next, set a stop price above the current price that you're willing to pay. For example, if a stock is trading at $50, and you only want to buy it if it goes above $55, set your stop price at $55. Review your order carefully and confirm it, and your buy stop will be active. This is a simple way to enter trades automatically when a stock hits your target level, helping you manage risk and avoid missing opportunities. And that's it. Now you know how to set a stop loss or buy stop order in Trading 212 to protect your trades. If this helped you, make sure to subscribe, hit the like button, and leave a comment if you want more Trading 212 tutorials and risk management tips. Thanks for watching, and I'll see you in the next video.